Ever wondered how to fix your own credit? Today, we'll unravel the mystery. Let's kick off this journey by first understanding what credit is. In simple terms, credit is a measure of your financial trustworthiness. It's like a report card, but for your finances. Why is it important, you ask? Well, a good credit score can open doors to a world of opportunities, from securing a loan for your dream home to getting a lower interest rate on your credit card. So how is this score calculated? It's a mix of several factors: your payment history, the amount you owe, the length of your credit history, the types of credit you have, and recent credit activities. Now let's talk about fixing credit. This process involves improving your credit score by rectifying errors, paying off debt, and managing your credit responsibly. With this basic understanding of credit, you're ready to dive into the process of fixing it. Firstly, let's identify what's pulling your credit down. To do this, you need to get your hands on your credit report. There are several online platforms where you can obtain this, usually at a small fee or even for free. Now, reading this report might seem like deciphering ancient hieroglyphs, but don't fret. It's simpler than you think. Your credit report will show a list of your credit accounts, their balances, and your payment history. Pay close attention to these. Late payments, for instance, can have a significant impact on your credit score. High balances as well, especially if they're nearing your credit limit, can pose a problem. And let's not forget errors. These are not uncommon, and they can unfairly pull your credit down. Once you've identified these problems, make a list. It's time to roll up your sleeves and face these issues. Now that we've identified the problems, it's time to tackle them head on. Roll up your sleeves, it's time to address those credit issues. The first and most crucial step is to develop a game plan. This is not a one-size-fits-all situation. Your strategy will depend on the specific credit issues you're facing. Are your credit card balances sky high? Start by tackling those. Keep in mind, high credit utilization can significantly impact your credit score. You can manage this by making consistent on-time payments and by keeping your balances low. Consider setting up automatic payments to ensure you never miss a due date. Next, let's talk about errors. Yes, they happen, and they can wreak havoc on your credit. It's essential to regularly review your credit reports for inaccuracies. If you spot any, don't panic. Contact the credit bureau and dispute the error. They are legally required to investigate and correct any mistakes. Negotiating with creditors can also be a powerful tool. If you're struggling with debt, reach out to your creditors. Many are willing to work out a payment plan or even settle for a lesser amount. Remember, their ultimate goal is to get paid, so they're often open to discussions. It's important to note that these strategies aren't quick fixes. They demand patience, perseverance, and discipline. But the payoff is worth it. By addressing these issues, you're not just fixing your credit score. You're setting yourself up for a more financially secure future. Addressing these issues might take some time, but it's a crucial step towards fixing your credit. You've addressed the issues, now how do you maintain a good credit score? Well, it's not as complicated as it may seem. Let's start with one simple rule: pay your bills on time. This may seem obvious, but it's astonishing how many people overlook this crucial habit. Late payments can negatively affect your credit score. So set reminders, automate your payments, do whatever it takes to ensure your bills are paid promptly. Next, let's talk about keeping your balances low. This is where the concept of credit utilization comes into play. It's a fancy term that basically means how much of your available credit you're using. The lower, the better. So, try to keep your credit card balances under 30% of your credit limit. This shows lenders that you're responsible with credit and can manage it well. Finally, regularly check your credit report. This isn't just about keeping an eye out for errors, although that's certainly important. Regularly reviewing your credit report helps you understand how your financial behaviors affect your credit. It's like a financial health checkup. To keep your credit score healthy, think of these 3 steps as the equivalent of eating a balanced diet, exercising regularly, and going for routine medical checkups. And just like maintaining good health, maintaining good credit requires consistency and discipline. Remember, maintaining good credit is a journey, not a destination. So keep at it, cultivate these good habits, and watch your credit health flourish.